Hello, everybody. Welcome to the Proptech Leaders Insights. My name is Jaime Luque. I'm the director of the ESCP Institute of Real Estate, Finance and Management. I am happy to introduce you our interviewee today. His name is Gilles Bourcy. He's the co-founder of Homepilot. And welcome, Gilles, to this interview.
Thank you, Jaime.
I'm going to introduce first what we are, put things in context. Then I'm going to talk very briefly about Gilles and his company. And then we're going to transition very quickly to the interview. So just to put things in context, we do this with all our speakers we invite. We tell them a little bit about what we are doing at ESCP and also our followers that are watching. So at ESCP, we have launched this year for the first time a Master of Science in Real Estate. It has been really successful. We have 35 students in the first cohort. And in addition to that, in the Master in Management, which is the number 5 in the world according to Financial Times, so we launched a real estate specialization, which brings another 52 students to campus. And within the Master in Hospitality, we launched a track which is called Hotel Development. So in total, we have right now more than about 110 students coming to ESCP to study real estate in its various forms. So anyway, so we are also very much into PropTech. PropTech is a field we want to be experts. We signed an agreement with the government of Monaco on real estate tech innovation, and we are launching other things such as an incubator, and we have very, very interesting projects ahead. So part of this talk with the idea is to put together a list of very successful PropTech entrepreneurs. Gilles is one of them. Lucky enough, is one of our alumni. We will talk about that today. As I mentioned before, Gilles is co-founder of Homepilot, and it's a 100% digital rental market startup. So, Gilles, let's start with our questions. I prepared some few questions for you. It's going to be a short interview. We want basically our real estate students at ESCP to look at this. We do this for them, but also we are going to share this in the social media with our followers, which now it's by thousands in LinkedIn. So first of all, again, thank you very much for joining us, Gilles, for your time today. I would like to go back to where things begin. I'm wondering, so we know that you had your Bachelor in Economics and Business Administration in Germany, University of Hamburg. And then, as I mentioned before, you're alumni of ESCP in the sense that you did your Master in Finance at ESCP. So I would like to know who was Gilles before studying economics and then Master in Finance, and how was that moment that you decided to become an entrepreneur?
Thank you for having me, first of all. I was always passionate about companies, about business, and quite interested more in the financial side, in the stock market as well. So I didn't come really from the technology side. As a kid, I think I was the last in my class to have a computer, just to give you a bit the context. So I was always, but very passionate, interested about business, how you build a business. And it started even in high school before starting to study. So getting my bachelor in economics and then going to ESCP and majoring in finance was all quite logical and actually quite a pre-planned somewhat. But then I started working in management consulting after finishing ESCP. I worked at a Bain & Company, then went into private equity for a year or so, and always had in the back of my mind the idea, or really I wanted to create something. I wanted to build something on my own. It was always in the back of my mind. And I remember the first year of ESCP, in some of the group projects with some other alumni I still am in contact with. We always talked about entrepreneurship and what we could build, what we could do. And actually, we all started doing some things after working a few years and building a company of our own. So it was always something that was in the back of my mind.
And it was 5 years ago when you decided to co-found Homepilot with another alumni of ESCP, Laurent Krenz. And I'm wondering, and this is the type of interview we are looking for, like this type of subtleties that everyone is wondering. So for instance, my question is, how do you know he was the right person? Because like to do business, you have money in between. We all know stories that things don't go well, and I mean, you may be friends, but then things end in an abrupt way. So it's a very serious decision what you took. So again, keep in mind our students are watching this. They may have ideas, they may have friends. So what would be your advice based on your experience, putting things in another way? How do you know he was the right person for starting a business?
You don't really know. You have the instinct somewhat. First off, I think the first point is I think it's better to be two, to be honest, and that's something I was always convinced about, and I knew I didn't want to start something alone. And after 5 years now in this journey, I think it's good to be not to be alone doing it. You shouldn't be too many either, but it's good to be a pair, to be a team, because being a founder is somewhat solitary in a way, because you're going through something that a lot of people don't go through, so it's difficult to understand. Even when you look at home, at friends, at family, if you don't do it, it's really difficult to understand. And still you have a company and you have employees, but it's not the same. It's not really colleagues. So it's good to be two, and it's quite a tough race, a tough journey, which is great. But it's good to always as well be possible to rely on someone else besides you. So it's good to be two, first of all. To choose your co-founder, it's not it's probably not the right word. To find your co-founder, I met Laurent. We met in the first year of ESCP in a student association, and somewhat. I think we liked each other, and I think we had a set of shared values, or at least we thought we had a set of shared values, and I think that's really important. And then he went to London and then Berlin, and I stayed in Paris. So it's we somewhat lost direct contact, but we again got together. He went after ESCP, after working a few years and discussing, and we realized there's something we could do together. And I think it's like founding a company, the same as finding your co-founder. You need to have you need to have an instinct and say, okay, it might be the right person. It's difficult to have a conviction because a lot of the things you find out along the way, you find out how you work together, how you get to know how to work together, you get to know each other. So there's no silver bullet. It's not something where you say, okay, it's this person and you have to go for it and you will see what happens. And it's the same as founding a company. You have a conviction. You say, okay, I think there's something we can do. There's a market. There's a product. There's something I believe in. And then you have to see if your belief, if your conviction is true or not. And you have to adapt. You have to adapt to working with the person you're working with, and so does he. So it's a process.
Okay, very interesting. And now, related question with your employees. You have, if I understand correctly, around 24 employees in your company. And again, you have to make a decision. It's really important decision if you get the right people. And you are in a tech company that I'm wondering if you are looking for like or people that already bring the knowledge, or if you provide them with the training. So how do you make the team work efficiently towards your goals?
obviously, when you start, you're doing more or less everything on your own, and which is easy in a way because you know how you work and you know what to do, and then comes a point where you start to have the size, and if you want to scale and you want to build a big company, and better sooner than later, you have to have other people do the work so that you can really focus on strategy, on how you build and you grow the company. So recruiting is recruiting and training and retaining the employees is really tough, especially in the current times with COVID and the sanitary situation. We always decided that we wanted to recruit people that aligned with our values, and we were more looking at capacity, or more like mindset, than at clear knowledge of property management, of real estate, because these are things that you can learn on the job, and moreover, we do things differently than traditional companies. So most people that come from traditional property management companies don't fit with the way we want to do things, don't fit culturally. So most of the people we recruit either have very limited previous experience in the field or have no experience at all. Moreover, we always wanted to have a new look at the business we're in. It's property management is a traditional business that's been around for a very long time. There's when you look at the market, there's one way to do it, and that's not the way we want to do it. So it's good to have people that can shed a new light on it and say, okay, why are we doing this way? Couldn't we do it differently? So it's really something that we encourage, and it's really also the way that we build Homepilot, because Laurent and I, we don't come from a traditional property management background.
I see. Yeah, of course. And now we are going to go deeper and deeper into what is Homepilot. Let me start with this question. So what is the value proposition that once you approach your potential property owners, what do you tell them?
I think from my own experience, and Laurent, so we are both real estate investors, small real estate investors, and what we realized when we looked at management offers or property management is that they don't manage it the way we would like to. They don't manage it as if it was their own investment. So and we really believe that there's a lot more you can do to have better returns. And in the end, that's really what we give investors through technology, because technology is a bit the enabler in that, is first of all, we provide them a hassle-free investment, because we will manage everything from the letting to the management, and through technology and automation, we provide them with lower fees, firstly. Secondly, lower maintenance costs. Thirdly, less vacancy. And the result of all of that is better returns. And that's what all investors and all real estate owners are looking for. They're looking for better returns, and that's really the value proposition. We do all that through technology, through data, and because we look at how. Let's take an example. When you look at maintenance costs, we track all the data we have, all the maintenance we have. We know exactly how much something is supposed to cost, so there's never overcharging. And we look at all the data we have, so we try even to anticipate the maintenance that will come. It's always cheaper to do the maintenance in a scheduled, more predictive manner than to do it on a weekend in reaction to a water damage or something. So it's really, we're trying to invert a bit the way real estate works, or not the property management works, where instead of being in reaction to something, we try to be proactive about the things. That's all through data, through automation of processes. So again, that's really the value propositions we have for landlords.
And so I understand that landlords now are seeking to increase their yield, the returns. But how do you build trust? So how do you convince them that the whole story makes sense and they should choose you?
Trust is really one of the main issues, because we're in a field where people it's almost structurally don't trust the property management companies, the letting agencies, for a lot of reasons. Because first of all, it's a very fragmented field with a lot of players with very varying levels of service and sometimes even of honesty. So really, firstly. Secondly, structurally, there's an asymmetry of information. So we know more about the real estate portfolio of a landlord than he knows. We know more about what's going on, and so there's always the fear that the property manager is not telling the entire truth, or is telling what works best for him. So it's really, we start from this position, which is tough, but trust is really the main, the only way it works in the duration, because you have to be able, if you don't trust your property manager, obviously it doesn't work, because we have more information, we have to decide for him. So we try always to give him as much information as possible, so as to have the less possible asymmetry of information between him and us. So all the information we have, he has. For example, on lettings, he knows all the visits that are being done, all the people who are looking at the property, all the visits that are scheduled of a real estate listing, all the people who want to sign the lease. So he has all the information. That's really important, first of all. Secondly, it's something then, obviously not always is always perfect. Secondly, is to be honest about when things don't go well, and to find solutions when there's problem. Two things we always that are very important in our core values is, first of all, we never cover up, and that's really important, and we always make the customer whole. So what does it mean? If there's an error on our side, and the error has a cost for the landlord, which unfortunately can happen, we'll always do what we can to take on our side these costs of the problem. So these are two things. So it's really important. But when the landlord sees that, you build trust over the years, and obviously we become also more productive, because when you have a landlord that knows that he can trust you, he will also be more time intensive to manage for our management teams.
Thank you for this clarification. Trust is really important. Now, I'm going to make the analogy with what is happening maybe in the United States. We know there are companies like Zillow, Open Door, Redfin, that are very big players in the United States, and they have this kind of hybrid models, like where they kind of cooperate with real estate agents, but they use, of course, technology. My understanding is your business 100% online. So what would differentiate you from those models, and why maybe you think yours is better?
We're a bit in different markets. So Zillow, Redfin, Open Door, they're really more in the transaction market. So on the selling and buying of properties, we are really in the management part. So we're a bit on different parts of the market, but we're in a similar position as well, where the traditional property managers are competitors, somewhat competitors, but also somewhat partners. We're growing a lot through portfolio acquisition. So we buy portfolios of existing property managers. So we're also working with them in a certain sense. So we're not really only in competition with them. One very important point when you look at Zillow, Open Door, and Redfin, for example, who are much bigger than us, is where they add value to existing players is through data. And again, and I think that's one of the main topics in real estate today is data, which has been underused for forever. And when you look at even in France, when you look at all these big property management chains, the data is so dispersed in different agencies, and there's no way to extract data, and that's really the biggest issue. And a lot of value lies in how do you price the rent, how do you price a property, how do you manage maintenance, and all of this comes through data. And today there's no business model from existing players to really extract the data, to organize it, and to have technology to have the right insight and to optimize processes.
And now I want to ask you about data in particular. In our Master of Science in Real Estate, we have a course on real estate big data analytics. We all know it's really important. It can give you some predictions about the market. So in your case, for your company, how do you use the data? What type of algorithms do you use that can help you become more interesting than traditional real estate agents?
I think the biggest problem today for existing real estate players is having the data. And today, most companies go through third-party software providers that are legacy softwares from the 90s or the years 2000 that don't really have the data, that don't really share the data. So even the big companies, in many cases, don't really have access to the the data, to their own data, which is a huge problem. So you have to build your own software from the ground up to be able to have all the data you want, to sort it as you like, to organize it as you need to have it. So that's the first point. And even when you look at and that's the second issue. Even if we look at big real estate letting chains in France, often they are franchise models. So they will share the same brand, they will share a bit the same service, but in the end, every agency is doing their thing on their own, with their own, sometimes with their own pricing, often with their own software. So every agency will have their own data in a sense. So there's no really use of data at scale, and that's the first problem, is just having the data. The second issue, and that's where we use data, we look at data mostly through a tenant a tenant point of view and a maintenance point of view today. To give you an example for how we do it for tenants, we track always obviously rent areas that we can have with different profiles of tenants, and try a bit to see what explains rent areas in the tenants we have selected. Secondly, we also try to reduce the vacancy. We get a lot of tenants for different apartments. For example, we will often have 10 different potential tenants on one listing, but that we need to qualify, that we'll have to send to share with us the dossier, so that we can check that all the information they provided is true and accurate. And in a typical lettings agency, one of the 10 will have the apartment, and that's it. And the other 9, but go into the bin, and it's over, and they have another apartment, and they will start again from zero. For us, how we have built it is that let's say for an apartment, we will have 3 dossiers that we can accept. One will get the apartment. There are 2 others that are waiting. We will automatically provide them with other listings where we say, okay, on this listing, you're qualified. If it works for you, you can have it immediately. So this helps us to reduce vacancy a lot. And really, it's just because we have automated the way we use the candidate dossiers on the portfolio, on the apartments that we have.
I see. Interesting. And next question is about funding, which probably is one of the most maybe interesting parts of doing a startup. We know you raised about $2.6 million in Series A funding. I'm wondering, more than knowing what is the type of capital structure that you envision for your business. That would be nice also to understand. But I'm wondering, how was your, I mean, what would be your advice to our students? Like, I guess students, they have, like everyone else that want to become an entrepreneur, they may have an idea. And would you advise them to go right away and get the funding to grow very fast, or they should do for a little bit by themselves, get some sales, and then go to funding? So what is your approach to funding?
I think there's several things. First of all, I think it's a great time to start a company. It has never been easier to have access to technology. It has never been easier to get funding. Interest rates are incredibly low. There's a lot of capital on the market, and people are very willing to take risk today. So it's a great time to start a company. It's a great time as well for the students that you have, because they can start any company they want, whatever their ideas. So they have a zillion choices, so what they can do. The tough part, I would say, and starting a company will take a lot of work, will take a lot of time. So you have to be selective about the idea that you will do. So you have to have the conviction that that is the thing where you should allocate 100% of your time. And I think that's, first of all, that's the toughest part. Once you have that conviction, I think the main point is not about funding, it's about what is the idea, the business that is worth pursuing and spending 100% of your time. Because when you do this, you can do another business on the side. And that's, I think, and you need to do whatever is necessary to get that conviction. Maybe it means, and that was the case for all of us, maybe it means doing it for 6 months or so to see if you get that conviction or not. So for us, the choice was in the beginning we did.
Sorry, no, it was small. I lost you for a second. Yeah, go on.
We did everything on our own, not because we thought it was too early to get funding, but because we needed to get that conviction that there was something to do, there was a business model, our assumptions were true, and that's when we raised funding. And in any case, it's also easier to raise funding once you can show or prove that your conviction has some meaning. Okay. So that's the first point. The second point is funding. The most valuable thing you have as an entrepreneur is your equity in your company. So you have also to be mindful of that, and there are a lot of ways to finance a company. You don't only have to raise equity, you can raise, depending on what business you're in, there's so many possibilities to get money. There are so many debt products, hybrid products, so many ways to get money, to develop your company, and you have to find the best way. It's not only venture capital, it's not only business angels, there are so many possibilities. So I also have to think about that.
So what would be your advice in terms of keeping equity for the entrepreneur? So in this case, it would be you. For our students, would they have an idea? And if you give some equity, you're selling equity to some investors. How much equity would you sell? I mean, once you're in the negotiation, of course, they want more, you want less for the same money. What would be the right number, if there is any right number?
There's no right number. It all depends on what your business is, what your position for negotiation is. To give a concrete example, and it also depends on your business. When you start, let's say you start a Facebook or something, obviously you will have to need a ton of money immediately, as fast as possible. You're growing like hell, but you're probably not yet profitable. It's not very clear when you will be profitable, and there it really makes sense to get venture funding. You look at a company like ours, where and it's true for a lot of software as a service companies as well, where we have recurring revenue. We are profitable in our main core business, where customers tend to stay for 10, 15, 20 years. You can have products that look more like debt than like equity, and where they're happy to fund it with good yields because they're a high security on our business. It won't go down from one day to another. So I think you really it's helpful, and I'm thinking about my finance education at ESCP and afterwards. It's helpful to have some financial education when you start a company, to think through those things, because I think the more you grow, you realize that your job as a founder or is to see how you get funding on the best terms, and you create. And I think Raphael talked about this on the last talk as well, and I think it's very, very true. You can create a lot of value through the right mix, the right way to fund your company. And the second question is, how do you allocate this money? Where do you spend it? On what projects? On what software developments? On what M&A acquisitions? On what recruitments? So it's the more you grow, the more it's really, you have these two topics that are really important, and it's important to think about it.
Okay, that is great. And for us, ESCP, we are really happy to hear that you advise people to get educated, and finance is one of them. We are almost concluding. I'm wondering if you have any vision about how the real estate technology industry is evolving. And also in the same question, if you have any advice to our Master of Science in Real Estate students.
I think it's a great industry to be in at the moment. I think especially on the technology side, there's a lot happening. On the Proptech side, there's a lot of funding, there's a lot of companies, there's a lot happening. So that's really interesting. I think the industry will change. One of the big topics is data, obviously, because it's like all sectors, but especially real estate is really depending on data. That's something that has a huge amount of importance, but it's really tough to get it. For example, today it's still very difficult to estimate rent correctly, or even selling prices, and it's still something that is very manual, very difficult. So there's a lot, and even on the scientific side, I know there's a lot of work on how do you estimate rent correctly, what are the statistical models. So there's a lot of work, and then a lot of R&D possibilities in that field, and I think it's really exciting. And I think that a lot will happen over the next, I don't know, 5 to 10 years. And you see all the big companies that are trying to invest and trying to get to the data. So I think there's a lot of interesting things happening, both on the startup side, but also on the big corporate side. So I think it's an interesting field where a lot is changing, and I think it's interesting to get into those companies, both startup as well as corporate. I think what I would recommend to real estate students that are interested, I think first of all, technology is here to stay. So it's not going to go away. So it's not, PropTech is not only something that should be reduced to startups, but even if you go into big companies, you should be familiar with tech, and you should be interested in data, because that's the way it's going to go, and we've seen it for all other industries as well. If you want to start a company, I would say think about it, and if you're convinced you need to do it, then you should do it. It's the right time to do. It's the right time as well, especially in real estate. Just be mindful of what you start, because you can start as many companies in your lifetime as you probably would like. So there's one you need to choose, and that's not that easy.
Gilles, it's great. I very much enjoyed the whole interview, and I like hearing that is the right time to start companies. Thank you so much for your time. We are very proud at ESCP having you as one of our alums, and thank you for sharing your expertise and all your background experience with our students and followers. and I wish you the best.
Thank you, Jaime. Thank you, everybody.
Thank you very much. Okay, thank you.